My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Welcome back, folks, and let me ask you a question. Are you in the multifamily space? Are you concerned because it's so damn expensive to buy these things these days, especially in some bigger markets? Well, our special guest today, Shawn DiMartile, has an interesting approach for multifamily investing in a very expensive market because he's based in San Diego, California. California is expensive. San Diego's crazy expensive, and he's making it work with multifamily properties there. So Shawn, welcome to the show. Great to meet you.
Thank you so much for having me on the show. I appreciate it. I'm really excited, and hopefully I can provide as much value as I possibly can to your audience.
Well, I tell you what, man, you're great at piquing curiosity, because when you filled out the information about what we're going to talk about on the show, you're talking about the new California gold rush, and that perked me up. It's a nice play on the old 1849 California gold rush.
Thank you.
Tell me a little bit about what you mean with that. What are you doing that's so different with multifamily, especially in San Diego?
So that the California Gold is the name of the ebook I wrote about this kind of subject, and I call it the new California Gold Rush because I see it as the most profitable real estate investing strategy you can use in California right now. So a little bit of background on what got me to that. Like, I've invested in a lot of multifamily, and I've had properties in Indianapolis. I have 295 units in Greensboro, North Carolina. Was never really interested in investing in Southern California because of the landlord-tenant laws, how difficult it is to navigate the process. It's extremely expensive, and it's a higher risk to implement a value-add plan here.
Yeah.
And then just a few years ago, I mean, they've had accessory dwelling units, or ADUs, for years now. And then 2 years ago, they kind of just totally changed the game. And they have two programs that you could utilize in San Diego. And these programs are unique to San Diego. They're not in LA. They're not anywhere else.
So it's very much specific on the market, and you've just really dialed this in. So yeah, curious to hear how San Diego has opened things up.
So San Diego, for context, is basically ground zero for the housing crisis in America. It's the most expensive market, one of the most expensive markets in every metric. It's the most competitive rental market in Southern California, and it's geographically constrained because you got the ocean to the west, Mexico bordering us to the south, mountainous rocky terrain to the east, it's too expensive to build on, and then Camp Pendleton military base to the north. All of the flat mesas and buildable ground have been taken. There really is nowhere else to go. So the city created new programs to essentially rezone in a way, but really just they're bonus density programs.
Okay.
And so they have a bonus ADU program and a complete communities program. And the bonus ADU program, essentially, you could take a lot that is within a mile of major public transportation that's zoned for multifamily already, right? So let's say it's zoned RM11 or RM32, whatever the zoning is. And long story short, without getting into all the minutia, you can buy a plot of land that has an existing house on it. Maybe it has a duplex, and you can either tear that down or add to the back and create a small apartment complex. So perfect example. One of our projects is a single family home we bought less than a mile from the beach. And when we're finished, it's going to be a 10-unit apartment complex.
Wow. Yeah. So you can really densify.
Exactly.
Okay.
Another project, we bought two houses that are side by side, less than a mile from the beach. We're tearing those houses down and building a 30-unit apartment complex.
Wow.
And the beauty of this too is not only that we're now able to put new properties and new multifamily in markets that otherwise really don't get hardly any at all. I mean, in the past 10 years, you can count how many new apartments there are in those markets we've invested in on two hands.
Wow. So like, you're talking about San Diego, correct?
Yeah, here in San Diego, the beach communities. I mean, you're in, and most of these communities are old 1960s, 1950s vintage assets that don't have air conditioning, don't have in-unit washers and dryers, or don't have parking. And so you're putting this new product on the market that has all of the above.
Very, very sweet. So how does that compare, like what San Diego's doing with other municipalities in Southern California. So it sounds like it's unique. What's the big difference between what they're doing for densification versus other markets in the area?
So, like for example, LA and all of California has written in their laws that you can build ADUs, accessory dwelling units, which are essentially just another way of adding density. But you can usually add 1 to 2 units, two
Yeah.
units by right, or what they call it. So you can add, and those can be up to 1,200 square feet each unit. So you could take a house and make it into a triplex. You could drop 2 units in the backyard, and they look and act just like and sell just like any other multifamily. And part of the beauty of this, by the way, if you were to buy a value add multifamily right now, you look on the market today on what's available in the coastal markets, you're going to pay on the low end about $400,000 a door. And that's for something that's a heavy value add.
Yeah.
You're going to inherit tenants. You're going to need to put in a substantial investment and probably get up to around $500,000 a door when it's all said and done. And then you're going to have a higher expense ratio because the property was built in 1952. We're building these units for an average of about $400,000 per unit, and they're brand new with better amenities. We get to pick the tenants, and we
Mhm.
have a much lower expense ratio. And if you use the Complete Communities program, you don't have to, the rent control laws don't apply for you for 15 years.
So for those of us that aren't in California, what is the complete communities thing all about? What's that all about?
Complete Communities is a similar density program. It just has more restrictions in it. And it does have both of these programs, by the way, have affordability components.
Hmm.
So a certain percentage of the units have to be marked
Affordable
as
housing.
affordable, right? And they're income restricted for people that make a certain amount of money, and you can only charge so much in rent. And in exchange, they give you a higher density. Complete Communities is a very similar program. The calculus for how many units you could put is a little bit different, and where you can put these buildings are much different. So Complete Communities basically has to be within 1 block of a major road, like a major 4 lane or 2 lane thoroughfare that has a lot of bus stops or trolley
Mhm.
stops and your restaurants and things like that. So you're putting these where there's already a lot more density, and the Complete Communities does allow substantially more density than bonus ADU for the most part. So it's a very similar program, just a little bit different on where you can do it
And how many units you can
and how many
you can
units you
put
can
in?
put down, right?
All right, very cool. So how many of these projects have you done so far, Shawn?
Personally, 2,
Yeah.
and my partners have done 11.
Wow.
So collectively, we're going to be in the mid-teens, and like a couple of my partners are doing even more deals on the side. I have the least amount of experience in doing these kind of development projects,
Mhm.
but the team as a whole has about 13 total projects underway.
Very, very cool. So do you see this expanding to other areas in California? Is there any blowback in San Diego because of this? What's the environment looking like?
Great question. In a perfect world, more municipalities would adopt this to get more housing because it's so bad here.
Mhm.
But in my personal opinion, I don't think it'll happen. I think California will go another 100 years with really bad housing issues because there's too many NIMBYs. If people aren't familiar with what that term is, it stands for not in my backyard,
Mhm.
because everybody wants housing, but they don't want it built close to them.
Right.
And the state of California in particular is has it just has a very long history of people suing to stop new housing developments, and I don't see that changing. I think right now there's a gold rush because it's only a matter of time because the community is already upset. They don't want more density. They want it to remain these small cottages overlooking the ocean, and they don't want there to be more traffic, the whole 9 yards.
Yeah.
Nobody wants more density by them. I,
Mhm.
I think that's a given. And there's so much pushback. There's so many lawsuits that I see it getting stopped in San Diego in a matter of time, and then we're back to square one.
Yeah. So some kind of like any gold rush, you got to jump in. It's it's usually the first guys that get the biggest benefit and all that kind of good stuff.
Exactly. And I think that plays into why it is a California gold rush. I think that there's only so many lots, by the way, that even make sense to do these projects. There's not
Sure.
a lot of lots that are large enough There's not a lot of lots that you can put enough units on, and we're basically not enough lots that actually pencil.
Mhm.
You know, because you have to add some affordable units. If the lot's only big enough to build 4 or 5, a lot of times it doesn't make sense for us because the dirt is so expensive.
Yeah.
The
And what's
process.
just out of curiosity, like what's the difference in rent between an affordable unit and a regular unit? Give me a
So a great example would be, and it depends because they have like low income units, moderate, very low. So an example would be like a moderate income restricted unit, which would be restricted in a bonus ADU program to that rent for 15 years. The max you could charge for a 1 bedroom would be $2,300, based off of area median income in the city. Whereas a market rate unit would go for $3,000 in that
wow.
same market. Another example is if you have to provide very low income. So the complete communities program will require some very low income units. Those 1 bedrooms, the max I could charge is about $1,000,
Oof.
and market rate in that neighborhood is 3,000 plus. So, you know, you're looking at a third of what the market is, and it makes a huge difference. So unless you've got a big enough lot to put some serious density, and then you add in the fact that the city in a lot of the areas has height limits, especially a couple miles from the coast. Within a
Mhm.
couple miles, it's 30 feet.
Wow.
So, you know, you could have a nice lot, but you're restricted on how high you can go. And, you know, there's so many variables. I've looked at so many deals that I wish I could put more units on, but it just doesn't pencil because it's not big enough.
I got a question for you now that you and your partners have quite a bit of experience doing this with those bigger projects that you're working on. Like what's the biggest one that you've got? Did you say 40 units?
So the biggest project using these programs is 30 units that I'm doing.
30 units. Okay. So when you're going through that one program where you have to have some very low income people in there,
Hmm.
does that cause conflict with the folks that are paying full price? Because if you got somebody that's on very, very low income, chances are it's just not just a financial thing, but there's a big social difference between
Hmm.
those people and the folks that are paying 3 or 4 grand a month for other units in the same building. Does that cause any conflict?
That's a great question, because there's a great argument that could be made that that's not really equitable because somebody else that might be grinding to earn their income is now having to pay more in rent than somebody that, you know, isn't concerned with grinding and working their way up the
Exactly.
ladder. And
For
now all of a
basically the
sudden they,
exact same unit.
yeah,
Very similar, right?
exactly.
Yeah.
You know, it's funny because I haven't heard pushback from tenants because I think a lot of tenants just aren't aware either that
Mm.
there's somebody in their building that's paying a third of what they have to pay just because they make less money. Um, in my opinion, the program is causing more issues than it solves. And at the end of the day, you just need a lot more housing,
Yeah.
tons of it. And what this does is it makes a lot of the projects I look at not pencil out. There's been a project where I looked at a house where I could have put 10 to 14 units on it, but because of the density issues, I didn't do the project and we walked away from it. So now they have 1 unit instead of 10 to 14. If they didn't have that, they would, in my opinion, get at least double the number of units. And to put it into perspective for people listening on how bad housing is here, last year, the city of San Diego built 5,033, I think is the exact number, total housing units, including ADUs, single family homes, and multifamily apartments. Okay. ADUs made up.
What's the population of the
The
municipality?
population in San Diego County is about 4 million.
Wow.
The city of Dallas last year built 55,000 apartment units alone with another 14,000 single family homes. So and Dallas is one of the cities leading the nation in rent decline. And so I think it's just a perfect real world, real time example of how supply and demand are the main drivers of pricing. And in a place like this, it benefits me as a developer that they're in some ways that they're not making it easy to build because my units are just way more sought after and I'm going to get way more in rent. Our
Yeah.
2 bedrooms are going to get $4,500 a month for a two
Mind
bedroom
boggling.
that's about 793 square feet.
Mind boggling. Yeah.
Yeah.
Now, out of those 30 units, how many of them do you have to offer at low rent?
So we're going to have to offer 4 at low
Okay.
rent of the 30.
Well, so not too bad. It's whatever that comes out to, a little over 10, 12%, whatever that is,
Mhm.
14%. Okay. Yeah. Interesting. So what are your plans moving ahead, Shawn? Are you going to keep focusing on this as long as you can? Sounds like deal flow is a challenge because you're looking at a lot of properties that just don't make sense to do this on, even though you might be able to densify a little bit, but because of all those different factors, it doesn't make
Right.
sense. So what else are you guys up to?
Well, we're our current focus is going to remain on more projects like this. We're making offers on properties often. And over, I think, the next 12 to 24 months, our plan is to continue focusing on this. However, there's so much up in the air, and we have to keep our finger on the pulse of what's going on. In November, there's a new ballot measure going up in California to make rent control much stricter, remove the stipulation that new buildings don't have rent control for 15 years. So if you remove that, um, you remove there's so many new regulations without naming all of them that are coming in that are going to make this strategy less profitable.
Mhm.
And they're also gerrymandering the lines on where you can do these kind of projects. That's already changed once. I'm expecting it to change again. In my opinion, the pushback's going to get so great that we've got to keep our open to going back to value add outside of the state of California, because I think that the gold rush is going to end within the next 2 years. That's just my opinion.
Yeah. It's interesting. There's a lot of parallels between California and a lot of areas in Canada as well. There's a province up here, Ontario, that rent controls, landlord tenancy is so skewed in favor of the tenants. It's absolutely gross. Same thing, mass exodus of investors finding other places that are more friendly, right? And
Hmm.
huge housing challenges and lack of affordability and no affordable housing and just same exact problems um, up here. So it's interesting how that works. And then you've got such a different situation not that far away, relatively speaking, in Texas, right?
Hmm.
Completely different ball of wax there. But I am glad to hear that you found something, at least temporarily, that makes sense real estate wise in California, because that's been a challenge for a long time.
Oh yeah, it has, and I think that challenge will be perennial. It'll never go away. The state of California, I think, is never going to implement the kind of housing policies that actually encourage tons more housing. They tend to implement the exact opposite and discourage investors from investing here. I mean, you go to most conferences, and most of the big gurus are going to tell you they don't invest in California,
Yeah.
and that's why you hardly see any new housing come up here. I mean, even with these programs, the biggest we could build, I mean, 30 units is kind of on the larger end of what you can make with these programs. It's
Yeah.
only smaller density stuff, not 100-unit communities, So they just need so much. Um, It'll never change.
Yeah. Switching gears a little bit here, Shawn, as we're wrapping up here. Um, what do you guys find is working best for you for getting the word out about what you're up to, for attracting partners, joint venture partners, investors, that sort of thing? I know you guys are very active. What do
Mhm.
you find works best for you these days?
I think what works best for me these days are business clubs and political action groups.
Really?
That has worked the best for me, as well as being guests on other podcasts, because a lot of times, people that live in California and want to invest here will hear me talking about this new program, and that pushes them to reach out. But there's a lot of, like, I joined business clubs that are just groups of people. You pay an annual subscription, and they have routine meetings and club and I guess committees and things like that. And what that does is it gets me in front of other business owners that love the city, want to invest in the city, and the program makes sense to them,
Mm.
especially because they know the market so well, and that really gets them interested in investing. We find a lot of that as well with those, like, kind of political groups. So here in 30 minutes, I'll be at a political luncheon for a candidate running for Congress.
Nice.
And at those kind of events, you're going to find people that have money and live in this city, so they understand the thesis of this investment model much more easily. And so that's been where I've gotten the most traction.
Cool. As we're wrapping things up, just a quick tip for some of our listeners out there. Sounds like you're very good at networking. What have you found works best for you to break the ice with somebody?
Ooh, that's a great question. My method is always to talk about everything other than real estate when I'm networking. So will go up to somebody, ask them how they're doing, why they're at the particular event, asking them about like what they're up to, being extremely interested in whatever strategy they're working on, and make the conversation more about them. It's kind of the whole how to win friends and influence people approach. And eventually someone will ask, what I do, what my strategy is, and I'll just lightly tell them what it is and wait for them to dig in more if they're interested. That always seems to work best for me.
Mhm.
And I just try to be actual real friends with people when I go to these events. So I try to keep the conversation not too much about what I'm doing in real estate, so much as what they are interested in, and going and grabbing lunch with them regularly. I think if you're listening to this and you want to know how, there's a famous quote of never have lunch alone.
Mhm.
Go make friends at these events and constantly go out to breakfast, lunch, or dinner with these people. You'll get closer to them, you'll build trust, and then a lot will happen from that.
Great advice. Shawn, as we wrap up, what's the best way for people to find out more about you and connect?
So the best way is easy. You can go to investorshawn.com. I spell Shawn SHAWN. You could also go to my company website, which is takeoffcapital.com. Take off like a plane taking off, capital.com. And you can see what we're up to, our assets, subscribe to our newsletter, anything like that. Tons of ways to get in touch with me. On my socials are listed on there, all that stuff.
Fantastic. Thanks for being on the show.
Thank you so much.
All right, everybody, take care. See you on the next episode. Hey there, I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewyou.com. Now at moneypartnerformula.com, we help real estate investors to create a process for predictably getting capital so they can do more deals without relying on hard money lenders or the banks. We do this by building them a private capital marketing system. Now, if you want help turning yourself into a big money capital attraction machine, then book a call with our team to see how we can help. Just visit moneypartnerformula.com to find out more. All right, take care, and we'll see you on the next interview.